All right, ladies and gentlemen, I hope you had a wonderful day. I got another watch list for you, but we have to talk about what happened this morning. The stock market literally got halted, or at least 82 names. So I'm going to show you a couple of candles here. Here is Uber, and as you can see, this giant candle, the close is real, but so is the rest of the candle. Let's go to Wells Fargo. That candle, that was real. Nike. Again, all of these are crazy. That candle, this is real. Again, we're talking like 10, 20% drops or rises in the morning. Some stocks went up, but I'm sure you heard about it. And even how today traded, it was absolutely wild. And what happened is about 82 stocks all got halted in the first minute because the opening order auctions seem to not be functioning. So is it a big deal? Yes and no. We're going to talk about it a little bit. I thought it was a good headline, and I'd start with it, but now Microsoft earnings, and I took a short right here not too long ago. We'll go over it during the plays, but Microsoft, they had their earnings. They barely missed on everything. Cloud was looking good, and then right now after hours, man, that guidance came in, and it is going to pretty much give us a pretty interesting move tomorrow to digest, as now everybody has to figure things out. And don't let me disappoint you, I got a pretty picture for you. And oh wait, did you not see this, bro? That's called real estate right there. Yeah, you see Trey? That's the billionaire founder of EXP Holdings. That's them too. You know, Cole Real Estate, we got to close out the bell today too. That was awesome, baby. Shout out to Cole Real Estate and everybody who's been a part of it. That has been awesome. But that wasn't the pretty picture I was going to show you, even though it's beautiful. But right here now, just this is why earnings are so important. And you're seeing with Microsoft, and we're going to have to factor this in for the rest of the earnings. But do not underestimate how much stocks have moved recently on the simple news of cutting costs. So literally Alphabet, they said they're cutting 6% of their workforce. They went up 5.3%. Amazon said 1%. They went down 2.4%. Coinbase said we're cutting 20%. They went up 13%. Microsoft said we're cutting 5%. Not enough. They dropped 1.9%. Salesforce said 10%. They went up 3.6%. Spotify 6%. They went up 2.0%. Stitch Fix 20%. They went up 9.4%. Unity said 3%, they went up 2.6. Vimeo 11, they went up 4. Wayfair 10, they went up 20. So the average right now with a lot of tech stocks, they've been laying off about 9% of their staff, and the average reaction has been 5.6% gain on the stock. So keep this in mind, especially with how we deal with Microsoft tomorrow, because it is showing you how important these earnings and how important Powell is going to be. But Chad, I hope you're ready for it all. We still got to finish out the week, and today's little stock halting moves and even how we responded to the data, I mean, it is starting to heat up here, so I hope you're ready. Run it.
Walking to the couch, it's the 2020 last shit. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then it feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
But right off that bat, ladies and gentlemen, we got to talk about Microsoft, and I think I wrote this right before the guidance came out, and that's why I said watch for the guidance next quarter, because essentially their earnings came in, and it was good enough to keep the Bears at bay. They went up 4%. That is what was priced in. Pretty much revenue came in slightly below estimates, and then so did the EPS, and then the cloud was just in line. It was about 1% better than what people expected, but a lot of people's fears from Amazon to all the other software stocks was that, hey, well, cloud is probably going to be the determining factor, and that's why now Amazon is getting clobbered here after hours, because pretty much we were up, and right here, that is when the guidance came in, and what Microsoft said, they said third quarter currency is going to lower sales by 3%. They said CapEx is going to increase compared to second quarter, aka they are still going to be spending more money. They said productivity is going to be within 16.9 to 17.2 billion. They said cloud sales will be 21.7 to 22 billion, which is pretty much the same of what they did now. And they said Azure is going to decelerate growth from about 4 to 5% from the mid 30s, aka they're going to go down to that 20% range. And they said cloud computing or personal computing is going to drop. I think it was about 30%. They said 11.9 to 12 billion, but they said 30% in line with the overall PC market. So pretty much the report was decent enough. Nothing scared people, but now that guidance, they didn't sandbag it, and it just wasn't as good to keep it up, and that's why we are dropping now. So we're going to have to watch how this plays out, and maybe I should jump back to the screens because, like I'm telling you, I had no plays on this coming into it, but I took a short right there at at 14:58, so at 2:58, not too long ago. That was maybe 15, 20 minutes ago, right before the guidance at 2:52, and then it started to drop here now. So this is going to be interesting. I also grabbed Amazon shares, and now I'm going to be down with those. So we'll get to the plays and see how they balance out. But now this earnings reaction, pairing that up with the companies you're going to get in the morning. But now what this is going to do to tech and cloud, this is really what we need to be watching for. So keep your eyes out for that. That is key number 1. And then key number 2, baby, that's stock halting. What happened this morning was truly rare. You don't really see it too often, especially if it lasts kind of long. It goes, spreading out through 80 companies, and it wasn't based off of anything else in the currency. So this is what I'll tell you. There's nothing to worry about in the short term, but this was a sobering reality check, and usually at other times where I've seen this happen, it's usually been paired up with a global currency move or something big like that. So in this case, maybe the next time we see it, it's just something to keep in mind, but we could quickly brush this off, and we've seen at times where mistakes like with Credit Suisse in May of 2022, that led to a big fat finger, but this time they just said it was a technical issue, and we don't know why there was the technical issue. Usually they say they updated software or did this and that. Well, they just said the operation wasn't functioning this morning, and the sobering reality check is simply that's how the markets would look if there wasn't market makers, putting in these buys and sells every single morning, every single minute. So keep that in mind. But now coming into the final thing, I don't have it on here, but we do have GDP data tomorrow alongside jobless claims in the Kansas City Fed, also new home sales, and even durable goods. There's actually a ton of data tomorrow. And then don't forget, we're getting that PCE around Thursday or Friday actually. So this is why it's going to be interesting tomorrow. And what I want to bring up here is soft landing or hard landing. I want to just make it very simple here because throughout the day today, we had big kind of movements. It was very, very weird to trade, though, because of that halting. You just didn't really know what was happening, and the rest of the market was moving while, over 10, 15% of the S&P was just halted. So it was very weird, but the data is having big effects on the bonds and dollar, and that's what we need to keep watching for. But it's very, very simple. If you do get a soft landing, any data that points to soft landing, aka the data is showing moderation in prices and inflation and things calm down, but it's not getting so worse where it's plummeting, making people say, oh my God, there's going to be a recession. Soft landing, go back to your 2022 trades. Go back to commodities. Go back to oil, gas, metals, anything that did good in 2022, like really good. That is what soft landing is going to go to because it means the economy is not going to totally crash, but you might have inflation rear its ugly head again. However, if you get anything hard landing related, bonds, gold, utility, and then even tech a little bit later because anything with lower rates would benefit off of this. So that is something I want to keep in mind for everybody because if you could remember this, it will make a lot of the data moving forward easier to read because the data has been kind of hard to read because it's like today, I believe it was like Richmond Fed or the PMIs, the Richmond Fed was really bad and it showed like hard landing recessionary, and then you saw the bonds catch a bid and continue, but in the morning we sold off on the PMIs because they were better than expected, but they are still kind of at a low number, which isn't good, but then it didn't show that total collapse with some of the data like we've seen over the last couple of days. So keep that one in mind. I hope this definitely helps you out. We still got more earnings, and I'm telling you, even right now, this is showing you how crazy it's going to get. So I hope you're ready, but let us get into the plays. So right off the bat, ladies and gentlemen, I got 3 plays that I'm looking at, and I wrote this before it all happened, but I still believe in it, and now the story has changed just in that 30 minutes or an hour after the bell. But Amazon, Snowflake, and ANET, anything with cloud was looking like it was going to be doing good up until they gave that guidance. But really, this is what I want you to realize. The money right now is tech. There's a lot of jobs in tech. There's a lot of profits. There's a lot of growth. It's in cloud. I say the money is in tech. The money in tech right now is in cloud, and anything cloud related, even Amazon can reverse some of these other moves, but this is going to be the story tomorrow. These are going to be all of the sympathy plays. I did grab 50 shares of Amazon after the bell. So right when the report came out, I said, oh yeah, that was good for them. So I grabbed Amazon 50 shares at what, 98.50. So now we're down like $3 on that one. That's like 150, but we made good money here on that Microsoft. But the idea was cloud was looking decent. You go with Amazon as the sympathy. We talked about this yesterday. And then now, as the guidance came out and it's bad, well, you go to the reverse now. So this is what's going to play out tomorrow. I really think this will be a big one, and there is going to be a lot of things tied to this one. But that is play number one. Then play number two. Speaking of earnings and sympathies, PLL in Tesla. Piedmont, they are a lithium company. They are related to Tesla. I believe that is their biggest customer out there. I think it's like a big majority of their revenue, but something you've probably noticed right now, I like the sympathy plays more than the earnings right now because there's a lot of room to run and we got a lot of things going on. So what I'm trying to tell you here is watch out for Tesla. Piedmont will be a sympathy, and Tesla, it could have an earnings run up. I am still in my shares, but what we've seen here is all of the earnings really haven't done much. So keep in mind the lack of earnings run up. Otherwise, though, the sympathies might move more than the company, and then after the report, go for the sympathies, and you might actually find some decent deals out there. But that is play number two. And then finally, another earnings, baby, Boeing. So I'm still short on this. I'm getting clobbered. Not too bad, actually. I've been clobbered a lot worse. But here's the thing about this one. They have earnings in the morning, and it is supposed to be their best quarter since they initially grounded the 737 MAX. So it could be really good for them. It could support a lot of this rally. But if anything falls short, watch for that to kind of destroy things. However, if it does really good or even better than what people are expecting, this will confirm the bullishness, and I will close out of my short. And it might even kind of signal a new turn in Boeing's history, even though they've had a very long history. But I think it's going to be interesting. Watch out for that. That one is play number three. But as far as everything else, let's hop back to what we did here on the plays. I shorted GM today, or GE today. I'm still short on that. I'm down like $2 a share. I didn't like their earnings in the morning. I was up at one point, and then it just started to rally, so still holding that. I flipped 3M for about like $50 on 50 shares, just $1 per share. Closed out of the Sumo yesterday. That was like 13%. Got $130 on a $1,000 investment. Closed out of that. That one held up very nice today, and then the Amazon and Microsoft after hours. So nothing too crazy, but now let's go to where we're at here. These are the plays I'm holding. Oh, man, it was just positive. That Azure, bro. That Azure, man, I'm telling you. But the ES was positive right before, but now we're barely down on that. And then here's the NQ still giving us a nightmare, but you see the bonds are working today. And hopefully if that comes back in, mixed in with everything, especially with the ES not down as much, that's beautiful, because the last time we were up on the bonds, this ES was down like $5,000. So maybe that changes tomorrow, but we'll see how that one plays out. Then here's the Apple shares. These are old. I was really, really down on them. They started to come back. So I think this was looking good with everything. I wanted to hold it, but we have all the big tech right now, pretty much long Apple, we're still down on. There's the Amazon from after hours, down 180, but that Microsoft play just made me $580, $590 right now just by shorting that guidance top. So that was decent. Still in the Disney pre-earnings run up. I really think Netflix and those plays should do decent, because they're not related to any of this, and we already have a good sympathy from that. And then Tesla, down 400. We were up on it yesterday and even today a little bit. Came back down, and I'm going to decide on what I'm going to do with that tomorrow. If I'm winning, I'm going to take my profits and not play earnings. If I'm losing, I guess a more Fati baby, I guess I'll have to hold for earnings. So we'll see what happens. But, Chad, that is pretty much everything. It is all going to be about these earnings tomorrow. This might be our first little shakeup here now, because as you're seeing, it's bringing down the futures and everything right now. So that guidance was the game changer, and hopefully this gives you a little earnings lesson on the earnings, or a learning lesson on the earnings. But we're going to have a lot to deal with, and we got more of these events. So stay in the game, and let's close it out. But that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, baby, you control your destiny. You are not a victim of anything, and I promise you, bro, nobody has control of what you can accomplish. It don't matter how much money they have, influence. This ain't no book money influence. Nah, bro, you got it like that. And if you realize that your understanding can take you far, you will stay in the game and do not cheat your future yourself by believing today that you do not control your destiny, Chad. So let's get it. Let's close it out. Let's have some fun. Let's get some excitement. And I just hope you know you blessed, baby. It's game time. And shout out Call Real Estate once again. Chad, I love you. Let's keep going. And horn.